All right, what's going on, man? We got a trade recap today for Wednesday, June 17th. Took a loss this morning, and it's really my mistake. I honestly messed up in a couple ways this morning. First of all, shouldn't have. Well, we'll get into it. Market structure looked really good. This was a typical, I would say, statistical loss. Like nothing wrong structurally with the trade. The problem is today is FOMC, and what do we do on FOMC days? We tend to chop and edge draws on edge the draw on liquidity and save those draws for the PM session when FOMC actually comes out, and we that's when we tend to take the draw on liquidity. Now you would think after how long I've been trading, I would know this. I kind of knew, like I know FOMC is a low probability day, but it kind of just hit me after taking this loss. And after I took this loss, I went back and looked at my trading journal, and it kind of just lit a light bulb in my brain. Like, why am I even trading on FOMC? The past the past three FOMCs that I have in my journal, we have failed to take the draw on liquidity. I think I have a loss and two break evens. So a loss in January, two break evens in March and April on those FOMCs. And then today is another loss. And it's not really that they were terrible trades. It's the fact that we don't deliver to the draw on liquidity typically during the AM session of FOMC, even if everything looks A plus, right? So even though like structurally this is a statistical loss that we're going to go over, it's important to realize that even though it would be considered a statistical loss structure wise, there's still things that you can take away and improve on. And this is one of those things. Today is FOMC. So with that being said, we're going to get into the bias, what I was looking for coming into the market open. Also, I got lucky. I got really lucky. Apparently, after you take a payout, however you have your copy trading set up, it it doesn't you don't just log on to Top Step and your lead account is still leading. So I only took this loss on one of my three accounts. We can go to the other two. You can see that the P&L are zero. I have this one as the leader. It says +1 because I was trying to enter on the other two accounts. I was in drawdown when I realized it wasn't copy traded. We were somewhere around here, so I told myself if we come back to where my entry point was, I was going to copy trade the other two and manually enter on those two. But ended up getting stopped out before I could manually enter on those two. So a little bit lucky only taking this loss on one account. So I need to fix the copy trader. Apparently, like I said, it doesn't roll over after you take a payout for some reason. I don't know why it does that, but I've heard of people getting screwed by not copy trading before. So anyways, getting into the daily bias, getting into the chart executions, what I actually saw, which is what actually matters. This is what we looked like coming into the market open, holding this 4-hour gap. I wanted to see us continue to hold this 4-hour gap, take this liquidity, and potentially go take the new week opening gap. New week opening gap is a very strong draw on liquidity. What I said is yes, we're within a high time frame buy model, but I do want to see this bearish 4-hour hold and continue lower to the new week opening gap. I can't be bullish right now until this 4-hour gets ran through. So until we run through this 4-hour gap, I would not be bullish in this scenario. Also, extra confluence is the untapped daily fair value gap, which we also had. You can see I have this marked out as a 4-hour sell side and daily BISI because if we come to the daily chart, this is a daily fair value gap right here as well. So a lot of confluences that led me to believe we were going to get a bit of a deeper retrace. And literally everything that I wanted to see happened. Well, the first 15-minute candle of market open, I'm just going to go full screen NQ. This is a big doji wick on the 15-minute time frame. The first 15 minutes, we come down. I thought we were going to potentially get an entry earlier on. We didn't. We come back up, sweep the internal high, and tapped into this 1 hour fair value gap. So still makes sense to tap this and go lower if my draw on liquidity is correct. We then get the next 15-minute candle is an incredibly bearish candle, like the most bearish candle I could have asked for in this scenario, like literally exactly what I want to see. You can see like this is a 172 point death candle to the downside, closing below the internal lows, therefore confirming the draw on liquidity in my eyes. Below the internal lows, the 15-minute candle closes at the extreme of the whole candle range. Like this is the most textbook. This is the most textbook in trade entry, in my opinion. For me and the way that I like to trade, like so high probability if it's not FOMC. And that's the caveat. It doesn't matter how good the structure is, because on the morning of FOMC, the market is waiting and generating liquidity most of the times for the Fed meeting during the PM session. And it's so obvious in hindsight to just stay out of the market. Like, and it's not that I was ignorant towards it. Like, I realized we had FOMC coming to Forex Factory. But I also see, okay, Trump speaks. Trump is going to speak this morning as well. So maybe that'll bring some good volatility and just drive us to the pre-existing draw on liquidity that I already have. So I know in the back of my mind FOMC is later this morning, and then I log on and the structure just looks A+ to me. And so it's like, okay, well, if opportunity is presented, and this was A+ opportunity in my eyes, then I'm still willing to take a trade. But the reality is, more times than not, we're not going to deliver. And I literally pulled this up. I went back into my trading journal and I sent these into the Discord. The last two, this is the previous FOMC day. This was a textbook long, and it gets break even and we edge the draw on liquidity. And what do? We chop around and we don't take that draw until the PM session. You can see 1400, 1500 during the PM. This is the most recent FOMC. Then the FOMC before that, what do we have? Pretty similar. We have a textbook trade for me in my eyes. I get break evened on it. What do? We come back to my break even point, chop around, and then take the draw on liquidity during the PM after FOMC. There's a very clear pattern, and typically like FOMC is probably my worst performing day, I would have to say, in terms of win-loss rate and break. Like, even if the market gives me exactly what I want to see, a lot of those times I'm getting break even regardless. Like, it's just a day to stay out of and to not trade. And like, in reality, bro, it's 1 day out of the month that I just need to take a step back. Some months we don't even have an FOMC meeting. Like, I think this might be the last one until August. There might not be one in July. I'll have to check. But anytime there's FOMC in the afternoon, like, there's literally no reason to be trading the AM session. And it just goes to show, yes, I'm having a lot of success in trading, but there's always going to be room for improvement. And also, you have to always be willing to take a loss, because you're going to make mistakes and losses are going to happen. You can also see this original move down on ES. This was this move down, I believe. Yeah, ES originally edged the draw on liquidity as well, came all the way back up past its internal highs, past its market open highs. ES did eventually take this low. I'm pretty sure Trump came out and said something. You can see this 1 minute crazy volatile candle. But even then, NQ still didn't take the low. So, yeah, it sucks that I took a loss. yes, it's also kind of fortunate that it wasn't copy traded, but also it also just sucks. I'd almost rather take the loss on all three just so I can have the same balance on all three. Um, but also like I only had a 2 trade buffer after taking this payout, so I technically only have a 1 trade buffer on this one account that took the loss, and I still have a 2 trade buffer on these two that didn't get copy traded. So there's a give and a take. I guess there's some sort of bright side. Also, the bright side to today is I'm now going to implement this rule for myself. Like, there's literally, I'm not going to be trading AM session of FOMC. There's literally no reason to. Um, we're either not going to deliver, likely to take a loss. Even if we do deliver, even if I do see exactly what I want to see, the odds of that trade getting break even are extremely high because we tend to generate an edge and leave the draws and liquidity for the FOMC meeting. So structurally, like I said, one more time, like I said, this was exactly what I wanted to see structurally, and is structurally a statistical loss for me. 15-minute candle close confirms the draw on liquidity. I have a safe stop loss above the most recent swing high before this displacement leg. These fair value gaps should hold, and we should not come up and take this swing high if my draw on liquidity is correct, if we're going to deliver to the low. And I set a limit order for 1.2 about, where was this? Yeah, for 1.2, I get filled here, and then we kind of originally kind of stall out at this 5-minute fair value gap, and then eventually we just go and take my stop loss. So that's the trade. And yeah, I mean, I'm not. It sucks. Nothing I can do about it anymore. And I'm just honestly happy that I have this proper mindset to where I can learn from this experience and use it to become a better trader in the future. And that's the whole point of trading. You don't have to be perfect. Yes, you can strive for perfection, but also knowing that it's unrealistic. So mistakes are going to happen, losses happen. It's all about how you learn from them and how you move on and take them. So that's the trade recap for me. Yeah, man, let me know if you took a trade or not this morning. I know some people in the Discord did take this short as well. Either got break even or took a loss, and it happens. Like I said, how I'm going to go about it in the future is just not trade the morning session of FOMC. I'm a little disappointed. This isn't something I haven't been implementing thus far, because the stats are right in front of my eyes, literally in my trading journal. All I had to do was go back and look at it after this morning's loss. But nevertheless, glad I'm learning from it now, and yeah, just gonna use it to improve. And that's all you can do with losses. So appreciate you watching. I guarantee you, I don't don't be taking my word for it and placing a trade during the PM session, but it's a very high likelihood that we come down and take this liquidity either before or either during or after FOMC, and I would not be surprised if it takes us to this new week opening gap. So that's the trade recap for me. And just gonna keep a positive mindset, learn from it, journal from it, and come into tomorrow ready to get after it and continue to follow my rules. So that's all I got, and appreciate you watching, man, and I will see y'all tomorrow in tomorrow's market recap, which is also the last day of the trading week because it's a bank holiday on Friday. So we will see what kind of opportunity presents itself tomorrow. All right, peace.